What is up, Wall Street Radar family? This is an emergency Sunday night market breakdown you need to watch before Monday open. Friday was a bloodbath. The Dow plunged almost 900 points, driven by the U.S. China Trade War escalation. Trump threatened 100% tariffs, countering China's rare earth controls. The fear was simple: Trade War 3 is imminent. But this weekend, we got a huge, quiet signal from Beijing, a signal that will entirely change the trading dynamic for Monday and maybe the entire week. Let's look at the facts. The Chinese Commerce Ministry said, "We don't want to fight, but we are not afraid to fight." Standard stuff. But here is the alpha insight. They did not announce any immediate retaliatory tariffs on U.S. goods. This is crucial. The market's worst-case scenario, driving Friday's 900-point drop, was an immediate eye-for-an-eye escalation, a rapid, full-blown trade war. By choosing to hold their fire and focus on negotiation and dialogue, Beijing has given the U.S. stock market a massive short-term lifeline. This buys us time. This is the market exhaling. Expect a significant relief rally on Monday, especially for beaten-down high-growth tech stocks like AMD and NVIDIA. It's not a fix, it's a pause button. Now, for my Wall Street Radar family, here is the crucial caveat. Do not mistake this pause for a complete victory. The fundamental problems are still there. The November 1st deadline for Trump's 100% tariffs is still looming. China's new rare earth controls are still a huge threat to our tech and defense supply chains. This is purely a negotiating tactic from Beijing, giving them leverage and a diplomatic window. So, what do you do with this information? You stay strategic. If your portfolio is too heavily weighted in those beaten-up tech stocks, use the expected Monday rebound to trim some positions and realize a small profit. This is smart risk management. The VIX is still elevated, showing major fear. Keep your cash position strong. Be ready to aggressively buy key power by zones if talks collapse later in the week. For now, as long as both sides keep saying dialogue instead of new tariffs, the market should stabilize. We trade on the narrative, and right now, the narrative is let's talk. China's dominance in rare earth elements gives it substantial economic and strategic leverage, vital for electronics, renewable energy, and defense. China's export restrictions on REs are a tool to protect its interests and counter U.S. export controls, complicating global supply chains. The U.S. accuses China of unfair trade practices, leading to retaliatory tariffs. The U.S. seeks to reduce RE dependence by increasing domestic production and securing alternative sources. The trade war has increased inflationary pressures in the U.S., complicating the Federal Reserve's monetary policy. Technology stocks, especially AI and semiconductors like NVIDIA and AMD, are heavily impacted. Companies with strong domestic sales exposure may be more resilient. Commodities and real assets can act as inflation hedges in a tariff-driven environment. So, is China's non-retaliation good for the market next week? Initial answer, yes. Use the relief rally wisely. Remember, we don't predict the outcome. We manage the risk. Are you buying the rebound, or are you selling the relief? Let me know your strategy in the comments below. Hit that like button and subscribe to the Wall Street Radar for your daily alpha gains. I'll see you in the next video.